This is an interesting time for asset allocators investing in the global economy because the global economy is going through several large transitions right now. To highlight just a few, we're moving from an era of monetary policy dominance to one where fiscal policy is going to become more important. For example, the Fed hiked rates for the second time last December. We think they're likely to hike rates another 2 or 3 times this year. They're already talking about tapering or unwinding the balance sheet that they've built up. The ECB has reduced the size of its quantitative easing program. So monetary policy is getting less important and fiscal policy is likely to become more important as we see governments are getting more willing to run fiscal deficits if needed. Another transition that's happening is this move from globalization away to deglobalization. Globalization has a big trend and a big driver of global markets over the last 30 years. And while it may have helped GDP growth, there's a realization that some parts of the population may have been left behind by globalization. So there's this trend away from globalization. Another change is this move from deflation fears to what we believe should be fears about high inflation. For the last couple of years, when we had the commodity price correction, a Fed that was more hawkish than markets expected, a dollar that was stronger, a lot of slack built up in the economy post the financial crisis, we had fears. We had not enough inflation and fears of deflation. This is going to give way, we think, to fears of reflation or to high inflation. All the transitions I talked about would lead investors to think that uncertainty has gone up in global markets. Yet volatility is being priced at very low levels and we think investors are being too complacent. So one of our high conviction views is to use the option markets to buy downside protections for your portfolios and also to make sure that your positions are liquid and we're maintaining high cash buffers in our client portfolios. A second important point is the one about inflation starting to move higher. We think investors are too much invested in deflationary assets and not invested enough in reflationary assets. For example, TIPS or Treasury Inflation Protected Securities are pricing only 2% per year inflation in the United States for the next 10 years. We think inflation is likely to be higher than that. This trend towards high inflation is likely to be aided by this move away from globalization. A third theme that's affected from this move away from globalization is investing in emerging market assets. Emerging market assets offer higher returns, they're cheap on a valuation basis, but we think emerging markets have benefited the most from this trend of globalization, and one should be careful when investing in emerging markets as we go forward.